Okay, good morning, East Africa. Good morning, FXPesa family. You're most welcome to today's session of the Market Snapshot Series. I'm Florence Maximilian. You call me Kaka Taifa. And of course, I'm here to share what is likely to happen in the markets, specifically for this week, but also facing much on what is likely to happen today. So if you're here, remember that this session is fully sponsored by FXPesa. So if you are new and you're just getting started and it is your first time being here, you can register or you can sign up by using the links that you see in the descriptions below so that you can be among us. So for those people who have been here for a long time, I think you know that we have these sessions going on here and there. The place where at least we share market insights, we give out what is likely to happen in the markets. Of course, touching all angles of market analysis, looking at what is likely to affect the markets externally. Here, speaking about fundamentals. But apart from that, analyzing the charts and spotting out the right trading areas, or let's say the right trading spots where you're likely to get the right trading opportunities. But remember, everything that we're going to discuss here, they are just for education purpose. So before you make any financial decision, make sure that you have confirmed more and you have more confluences that are supporting that trading decision. So as always, we always start with external factors that are likely to affect these markets today. So guys, I think for those people who are here from last week, on Friday, we had a market snapshot series, episode where we discussed on what was likely to affect the markets on external factors. On Friday, we had CPI. So we are going to refer on what happened on CPI, but also looking forward if there is any information which is likely to affect the markets today, we are going to discuss them together here. So as I've told you that if you are a beginner, just getting started here, remember this session is fully sponsored by FXPesa. So you can open your trading account right now by using the links that you see in the description. But also for those people who are live on Instagram, you can just use the link on bio. So from there, you can get access of everything which is being provided here at FXPesa. So starting with the first side of market analysis, guys, we are going to look at all social, economic, and political factors that affected the markets before the weekend, but also what are likely to affect the markets on this week. And the good thing about this is that we have different calendars where you can refer, where you're going to find the exactly date, the exactly time, the currencies which are going to be affected, but also the impact expected from those informations. So let me go straight forward and start looking on what is likely to affect the markets, specifically today, on the calendar. So let's go. Okay, of course, by referring on Forex Factory, on Friday, we had some informations which of course affected these markets in one way or the other. I'm quite very sure that we saw some spikes here and there. We saw gold pumping upward, where the market had that very huge bullish move within a fraction of a second. But also we saw USD going down, and it was because of the CPI. Of course, CPI is Consumers Price Index. The source of this is the Bureau of Labor Statistics. It measures the change in the number of goods and services purchased by consumers, excluding food and energy. And the effect on this is always actual greater than forecast is good for the currency. And of course, actual greater than forecast is good for the currency, meaning that if the actual data comes greater than what they are forecasting, then that indicates a bullish sign on that specific currency. But if it comes less than what they are forecasting, then that indicates the bearish sign on that currency. So on Friday, we had that CPI. Of course, it came out negative for the dollar. So I think you saw the first one was 0.3 expected, and the actual was 0.3. So no effect on that. The second one was 0.3 expected, but it came out less than what they were forecasting. So it was 0.2%, which was bad for USD. But apart from that, the third one the expected data was 2.5, and then it came out less than what they were expecting or what they were forecasting. So it came out as 2.4%. So this was totally bad for USD. So that's why we experienced the bearish USD everywhere on Friday. You see, of course, during the evening hours, we expected, we got that movement, or we got that bearish move on USD, and it was because of CPI. It came out negative for the dollar. So that is already done. We have to see what is likely to affect the markets specifically today. Of course, today is February 16th. And as you can see from the calendar, we don't have anything which is likely to affect the markets today. So for anyone looking for to trade today, you are trading under no market conditions. And of course, expect maybe less volatility in the market because there are no external factors which are likely to affect the markets today. But traders who trade under no market conditions can trade these fluctuations of prices. You see, you trade under no market conditions, maybe you get your 100, let's say 50 to 100 pips trading these major and minor currency pairs. So it is total okay. But from the calendar, looking forward to see if there is any external factor which is likely to affect the markets today. Nothing from the calendar. So if you are going to trade today, be aware that there is no any external factor which is going to affect these markets that we are trading today. You see, these external factors which are likely to affect the markets today. So generally, I think for today, we'll go straight forward to the charts. We'll go straight forward to analyze and see if we can spot out any trading opportunity on whatever asset or let's say commodity or forex pair you're trading. Then I'm going to very sure that you can analyze together here. We're going to have a lot of time here. Let's discuss on that. And I'm quite very sure it will help in one way or the other. Maybe we can just look at what is likely to happen tomorrow on the side of fundamentals. Tomorrow, Tuesday, of course, at 3 a.m., we have GBP. But apart from that, later we have the CPI, Canadian dollar CPI. So that is for tomorrow. But for today, nothing more on external factors. So we are going to analyze the charts, looking forward if we can spot out our trading opportunities in a very easy way or in a very simple way. So because we have different people here trading different stuffs, so feel free to write on a comment, feel free to share which currency pairs are you trading or anything that you're trading, so that we can analyze them here together, share the tentative directions, spot out the right areas where we are likely to get maybe the buying opportunities or selling opportunities. And of course, if they are clear and if you confirm more, you can also take advantage of whatever we are going to discuss here. So okay, this is Robert. Good morning, Mas, or good morning. Okay, analyze gold USD. Okay, good morning, Kaka Euro USD. Okay, so we are going to start analyzing Euro USD. But before we start analyzing, I just want to remind you that if you are new here and you're just getting started, this is FXPesa, and this market snapshot series, they are fully sponsored by FXPesa. So you can open your trading account by using the links that you see in the description below. But if you're live on Instagram, just open your trading account by using the links that are on our bio. So let us start with Euro USD. Okay, I hope everyone can see my screen. So when analyzing these charts, I'm always saying here that we have different types of traders, you see, and Of course, your analysis will depend on the type of a trader you are. I'm going to analyze Euro USD as a day trader. See, and when day trading, you have to clearly understand and know the nature of the markets that you are going to trade. Let's say if you're going to trade like these major currency pairs, let's say Euro USD, GBP USD, USD JPY, let's say GBP JPY, you have to clearly understand that these markets are always offering, let's say, not more than 100 pips per day. See, so if you are going to trade, let's say, USD today, you have to clearly understand that I must set a goal which is attainable, at least 50 pips to 100 pips. We have something called top-down analysis. When analyzing these charts, you have to analyze starting from the higher time frames, going to the lower time frames. And why higher time frames? From the higher time frames, you are going to see the general direction of this market. You are going to know exactly who are dominant in that market. So if USD is dominated by buyers, you're going to see it clearly from the higher time frames. Or if USD is dominated by sellers, you're also going to see it from the higher time frames. So as you can see from here, for the past 3 months, we can all agree to each other that Euro USD was dominated by buyers. So generally, we are in a bullish Euro USD. So if the market continues pushing upward, then our next target is somewhere here. So I'm marking this level. But if the bullish rally continues, then this is the next target where the market is likely to reach. But apart from that, for the past like 10 months, this market did not have that aggressive buying or aggressive selling. So it shows us that there is a very big possibility that this market was a little bit dominated by sellers. That's why the bullish move, which moved from here up to here, did not continue because sellers tried to enter. You see, but generally, this market had a little bit of like some sort of consolidation. But referring to what is likely to happen today, we have to refer to these informations which are very, very near, and we can see that for the past 3 months, this market has closed bullish because we see bullish candlesticks here. So in order now for us to know exactly what is likely to happen, we can just put some zones, and these zones are going to help us as we go to the lower time frames. We are going to know exactly where the market is, whether it's on the right area where we are likely to get a little bit of shorty trades, or we are on the area where we are likely to get bull trades. So let me mark some zones here, and then from here, at least we know exactly what is likely to happen today on Euro USD. Of course, I'm marking these zones because as we go to the lower time frames, these zones are going to help us to know exactly where the markets are. So if the market is on the area which shows us that the history on that specific area, sellers are always entering, then we are likely to get our sell trades. But if it is on the area where buyers are always entering, then we are likely to get our buy trades. See? So generally, we are going to focus much on this area where the market is currently, on this area here. You see, on this area here. So now from there, we start our top-down analysis, analyzing these charts, starting from the higher time frames, going to the low time frames. And on Euro USD, as I've told you, or as you can see here, we have bullish move on Euro USD because for the past 3 months, all these candlesticks are bullish. So this indicates that buyers have much power compared to the sellers who are present. But we have marked these zones so that we can know exactly where the market is currently, because by referring to the history, it can also help you to know exactly where the markets are. So as we go to the lower time frames, we are going to focus much on this area where the market is currently. And let's say if your target is 100 pips, or let's say 50 to 100 pips, just a bearish move from here up to here, these are more than 100 pips, or a bullish move from here up to here, those are more than 100 pips. So we start doing our top-down analysis. From the monthly time frame, we just go to the weekly time frame. You see? And on the weekly time frame, by referring to the history, you can see that we had a very huge bullish rally on Euro USD starting from here to here. But once the market touched on this area, I think you can see how sellers are rejecting around this zone. See, you can see how sellers are rejecting around this zone. All the time the market touches on this zone, we see sellers entering. All the time the market touches on this zone, we see sellers entering. And where the market is currently is on the zone where we are likely to see sellers entering again. You see? So that's the general information on what is likely to happen on EURUSD. But you won't just conclude and make your trading decisions just because of the general information. You have to know exactly what is going on that specific area where the market is currently. Let me mark this zone here. And as we go to the lower time frames, guys, bear in mind that the market was dominated by buyers for the past 3 months. And those 3 months are just here. So as we go to the lower time frames, for the market which is dominated by sellers, it has to give you bullish characteristics. And bullish characteristics is when the market is giving you clear highs and high lows, something like this, breaking structures and coming back to retrace. You see, that indicates a bullish market. So as we go to the lower time frames, now we start looking at those market structures. Let me also mark a zone here around this area here. There is something here. So around this area here, there is something. So from there, we just go to the daily time frame, and from the daily time frame, at least now you can start seeing the market structures, whether they are bullish market structures or bearish market structures. They are at least a little bit clear from the daily time frame. See, from the daily time frame, at least the market structures are quite very, very clear. See. So now we have to focus much on this very specific area. Let's say if we consider the bullish move, this was clear high, this was clear low, this was clear high, this was clear high low, this was clear high, and this was clear, of course, the bearish move. But if we consider this market at least starting from this area going upward, you see, going upward, you see, this was clear high, this was clear low, this was clear high, and the market came back to retest around this zone. And currently what was happening on EURUSD, this market is continuing with its bullish rally, see, heading upward. Let me mark this area here, the last high, as our target. You see, if the market continues pushing upward, then we are likely to exit our trades once the market touches on that area. See, so now from there you have to focus much on this area here where the market is currently. So generally what I see on EURUSD, the market is on its bullish rally. See, on its bullish rally. So as we go to the lower time frames, specifically on 4-hour time frame, I'm quite very sure starting from this area, we are going to find a lot of bullish characteristics around this area. So let's go and see what is going on 4-hour time frame. I think you can see for the bearish market, or this retracement which was going on here, the market created low, created high, created lower low, lower high, lower low, lower high, lower low, and it did its fully retracement. As you can see, the market gave us bullish, a bullish reversal around this area. This was double bottom, and the market gave us this high, and this was a little bit of low. So what is going on here? What is going on EURUSD right now? The market is just consolidating here. You see, it's just consolidating here. But if the market gives us something like this, if it comes back on this very specific demand zone, then we are likely to continue pushing upward that way. See, but from whatever is going on here on EURUSD, the market is just consolidating, guys. See, the market is just consolidating. I think you can see clearly how this market is just consolidating around this area. See, so if you're thinking about trading this, or if you're thinking about, let's say, taking advantage of this, at least just wait for this consolidation to come to an end. You see, and if it comes to an end by breaking this movement coming back around this area, then we are likely to take our buy trades, at least starting from this demand zone. See, but otherwise, guys, this market is just consolidating. this market is just consolidating. But if you go to the 1 hour time frame, you will see exactly what I'm speaking about. This is just consolidation. You see, the market is just ranging around that. You see, I think you can see clearly what I'm talking about. You had this very huge movement coming back to this area, but I'm quite very sure there is a very big possibility of us seeing this consolidation at least pushing this market down. And once it pushes this market to this demand zone, then you can think about going long, because generally Euro USD is bullish. See, generally Euro USD is bullish. I think you can see moving from this area going upward on a daily time frame. This was just a retracement, and the retracement is done. The market has come back to retest on this zone. Then from there, we are likely to see this market continue with its uptrend. Then, in order for you to get the right area for you to enter your buy trades, at least around this zone here. See, so that's what I see on Euro USD. Okay, this is Isaac USD JPY. So he wants me to analyze USD JPY. Isaac Mwansasu. Okay, let's go and see what is likely to happen on USD JPY. See, let's go and see what is likely to happen on USD JPY. USD Japanese yen. Okay, so as I've told you that if you're a day trader, of course, let me not delete this. I remember last time when we were analyzing here, we had this analysis on USD JPY. I think you can see the market has started giving us something. See, it has already started giving us something. We're thinking about going long on USD JPY, and I think you can see the market was somewhere here. We expect this market, at least if it wants to break this area and continue pushing upward, if it gives us the movement up to this zone, then we're expecting to buy, of course, any profits. So let me direct each and everything, and then we start analyzing afresh. See, so as I've told you that when analyzing these charts, you have to analyze starting from the higher time frames, going to the lower time frames. And on the higher time frames, you are going to see the general direction of that market. And that general direction is going to direct you, or is going to guide you as you go to the lower time frames. So from the starting from the monthly time frame, USD JPY has been bullish for a long time. You see, USD JPY has been bullish for a long time. But where the market was on USD JPY, it was on the area where the history is showing us that the market once started on that very specific area, and we had a very huge sell-off of over 2,000 pips. So that's why we can see for the past 2 months, I mean, for the past, let's say 1 month, the market had a bearish rejection. So now we have to mark some zones so that you can know exactly what is likely to happen on those very specific zones. So if the market continues with its bullish rally, then the next stop is likely to be here, you see, and that area, the next stop is likely to be around this zone, you see. And the last time when the market reached on that area, it was, okay, let me check. Okay, the last time when the market reached around that, you see. So generally, USD JPY has been bullish for a long time. For more than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, this market had a bullish rally. It was heading upward. I think you can see clearly. Now, let me mark some zones which can help me, because generally, if the market is bullish, most of the people will be thinking about where they can find the right spot to enter their buy trades. But we don't just buy because the market is bullish. We buy if the market is on the right area where we are likely to get our buy trades. See, so let me mark some zones here which are going to help us as we go to the lower time frames, but specifically we are going to focus much on this area here. See, on this area here. So let's say for the market structures, I can see this, the market created high, created low. This was clear high, and then the market is maybe giving us lower low. You see, something, high low, something like this, and then it can continue with its bullish rally that way. You see, now we have to go to the lower time frames and see exactly what is going on around this area. Let me also mark this zone. Around there. So as we go to the lower time frames, I think we can get some. Okay, so as we go to the lower time frame, specifically starting from the weekly time frame, I think now we can see exactly what is happening. This bearish move, we have the bearish move on USD JPY, and as I've told you before, that the market touched on the area where once the market touched there, we had a sell-off of over 2,000 pips going down. You see, so now that's why we can see this very huge rejection around this area. Not only there, the market has come back to this zone, and of course, it is the demand zone where we are likely to see buyers trying to push this market upward again. You see, so let me also mark some zones which can make sense as we go to the lower time frames, so that you can go and see exactly what is going on around this area here. See, around this area here. Bear in mind that for the last month we had a bearish USD JPY, so we are likely to find more of bearish characteristics around this area. You see, so as we go to the daily time frame, the daily time frame is a very good time frame where you're likely to see the right market structures. So if the market is heading upward, it will give you clear high highs and high lows, and if the market is heading downward, you're going to see clear lower lows and lower highs. Let's say, for example, the market from here up to somewhere here, these were the breaking structures and coming back to retest, breaking structures and coming back to retest, breaking structures and coming back to retest. But as you can see, we had a very huge sell-off around this area, and as I've told you, that the market is on its demand zone. So if the market is on its demand zone, then there is a very big possibility of us experiencing this market rejecting going upward. Now that's an idea on what is likely to happen on USD JPY, but we have to focus much on this area now and see if the market has given us those reversals and each and everything that we need. You see, so as we go to the lower time frames, we are going to focus much on this bearish move, because bear in mind the market is on the zone where once the market touched on that zone, of course demand zone, we had a bullish move of over 500 pips of this market going upward. Not only that area, but also the market once touched on that specific zone, we had a bullish move of over 600 pips. So there is a very big possibility of us also having a bullish move of at least 200 pips going upward. You see, at least 200 pips going upward as it coming back to this specific zone. You see, so now we have to go to the lower time frames, starting from the 4-hour time frame, and see exactly what is happening around this area, and see maybe we can find the reversals showing us that buyers are now taking over, or let's say we might find some structures which can help us to know exactly what is going on around that area. So we just go to the 4-hour time frame, and on a 4-hour time frame, we are going to focus much on this specific area, this bearish move. You see, this bearish move. So as you can see, we had a very huge consolidation around this area. This market spent a lot of time here. See, I think you can see the market spent a lot of time here. Many days were spent around this area where the market was just consolidating. See, for this bearish move, the market is on the demand zone, or let's say on the area where buyers are likely to enter, and we see this consolidation happening here. See, so now as we go to the lower time frame, specifically the 1-hour time frame, we might find a lot of stuffs going on here, and they might also help us to know exactly if the market has confirmed, so that we can think about going general long, or maybe they are selling maybe opportunities, because where the market is currently for the consolidation, or for the market which was consolidating, ranging between this level and this level, this level and this level, the market is almost on the resistance. So we are likely to get something like this again if the market continues consolidating. But if the market breaks this, then we are likely to see this market pushing upward, giving us that bullish move. So as we go to the lower time frame, we are going to focus much on that specific area. So on 1 hour time frame, I think everyone can see clearly that the market was just consolidating. See, the market is just consolidating around this area. And let's say if you are a trader looking for to trade this, and let's say you keep your eyes on this and see this market breaking this zone, of course the resistance area, then we are likely to see this market continuing pushing upward like that. See, but otherwise, from where the market is currently, I think you can see this bullish rally is almost coming to an end. See, it's almost coming to an end. For this consolidation, the market is just ranging between this zone and this one here. You see, between the resistance and support, something like this. You see, support and resistance, support. So right now, the market is just heading to the resistance. You see, and then once the market touches on this area, people are likely maybe to get their selling opportunity, but very short time selling. You see, for those people who are scalping, if you see reversals and everything has confirmed, you might have a bearish move. For someone who is looking, let's say, to trade this and hold it, at least around this area, you are likely to get your bull or your buy trades. See, around this area. But otherwise, from what I see, if you're a trader looking for to trade USD JPY, right now, you just sit back and watch what is likely to happen around this area, because almost the market is on the resistance zone where we see all the time. Once it touches on that zone, we see a sell-off. See, so that's the general information on what is likely to happen on USD JPY. See, on USD JPY. But if you see the market breaking this resistance, then that will confirm for you that buyers are now taking this. I mean, they are taking their positions, and then we can see at least a bullish move of maybe over 100 pips going upward. See, over 100 pips going upward. That was CPI. Okay, we have someone here. Okay, we have someone here. This. Okay, USD JPY. Okay, someone wants me to analyze GBP USD and the GU, and this is Rich Nell official Kenya. Okay, so let's go and see what is likely to happen on GBP USD. GBP USD. Of course, GBP USD has almost the same structures as Euro USD. Same movement on GBP USD. For those people who are here last week, I think you remember we were expecting this market to give us this bullish move. You see, this bullish move. So the same way, I think you see this happened here, because the market gave us a reversal thing. This was double bottom. The market broke that area. It came back to retest. Then we had that bullish rally. Of course, our target was somewhere here. But from what you see, as I've told you, that GBP Euro USD is right now consolidating the same way as GBP USD. I think you can see this market is just ranging around this area. You see, now in order for you to continue pushing upward, or in order for you to buy or to go long on this, at least if this market comes back around this area, then you are likely to continue pushing upward. But where the market is currently on GBP USD, guys, this market is just choppy, consolidating, giving you nothing around this area. And funny enough, this market is almost inside. You see, it's just in the middle. So on this area, nothing is going on GBP USD. See, so at least just wait for this market to complete its consolidation, and then after that consolidation, if the market gives us this bearish move, at least coming back to these demand zones, then you are likely to get your bullish move starting from these areas. But otherwise, it's the same as GBP, I mean on Euro USD. Or maybe if you see this market pushing up this zone, then you're likely to get your sell trades. See, you're likely to get your sell trades. But otherwise, guys, where the market is currently on GBP USD, it is not the right area for someone to think about trading this. See, so be aware of that. Okay, that's GBP USD. Okay. Okay, there are people who want me to analyze, okay, GBP JPY. Of course, at the end, you're going to finish with USD, I mean, gold and BTC. BTC and gold. Okay, let's go and see what is likely to happen on GBP JPY. GJ. Of course, GBP JPY is among the volatile pairs that you're going to trade in these markets. So if you're a trader looking forward to trade this, I'm quite very sure that you're likely to get some money from GBP JPY. Of course, the last time we analyzed this, we had this very huge movement from here going up, and of course it was a winning trade. So let me delete each and everything and see what is likely to happen on GBP JPY today. See, okay, so starting from the higher time frames, of course, GJ and GBP JPY and USD JPY, they have almost the same structures. Not only that, also for those people who are trading Euro JPY and CAD JPY, they also have almost the same structures. All these have been bullish for a long time. See, GBP JPY has been bullish for a long time. USD JPY has been bullish for a long time. Euro JPY has been bullish for a long time. CAD JPY has been bullish for a long time. So as you can see, this market also is bullish because for the past, let's say like 12 months, this market has been heading upward. I think you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This market has been bullish for a long time. So we're in a market where buyers have much power compared to the sellers. And if this market continues with its bullish rally, I think you can see in 2009, you see, where the market rejected, it was a very, very strong zone. I think you can see this zone here. You see, so that's why you see this market rejecting a little bit. Let me mark this zone. But in 2009, this market once touched around that area. You see, 2008, 2007, 2008, this market touched around that area. You see, so let me mark it as a zone because that's where the market is currently. So the market here, we had this very huge sell-off of over, how many pips are these? Of over 9,000 pips. You see, over 9,000 pips of this market going down. So that's where the market is currently. So we are likely also to experience something like that. We are likely to see this market at least rejecting around that zone. But once the market, because generally this market is bullish, if it breaks that area, then our next move or our next target is going to be around this area, which is 241.628. You see, something like that. But we have to go and focus much on the area where the market is currently. And of course, from the higher time frames, this market is bullish, you see. And if the market is bullish, we do trade market structures. For a bullish market, we have to see this market giving us clear highs and high lows. That's the characteristics which are creating a bullish market. You have to see something like that, you see. So now, in order for you to see that, you have to start doing your top-down analysis, analyzing starting from the higher time frames, going to the lower time frames. Bear in mind, GJ is also volatile. So if you are going to trade this, you have to know exactly how to read the market structures. I think you can see for last week, we have told you the history is showing us that the area where GBP JP has reached is the zone where once the market touched on that area, and it was in 2008, the market had a sell-off of over 9,000 pips going down. This area here, see, over 9,000 pips going down. So there is a very big possibility also sellers to see this area very attractive for them, and then they are likely to react going down. So that's why I think you can see for the past week, we had that very huge sell-off around that area. So let me mark some areas here and see exactly if we can see the market structures that are being created around, at least around this area, as we go to the lower time frame. So from the weekly time frame, now we just go to the daily time frame and focus much on this area here, focus much on that area here, and see exactly what is likely to happen today on USD, I mean on GBP JPY. See, on GBP JPY. Let me mark this zone here that way. You see, and see what is likely to happen on GBP. Bear in mind, this market has been bullish. So as we go to the daily time frame, we are likely to find this market giving us clear high highs and high lows. You see, so from the weekly time frame, we just go to the daily time frame, and on a daily time frame, guys, you're going to see clear market structures in a very, very easy way. See, so now as you can see, the market failed to continue creating these high highs and high lows. You see, it gave us this bearish move, and where the market is currently on GBP JPY, the market is on its demand zone. So that's why we see this market rejecting. And if this market rejects, at least the next stop is at least somewhere here, which is this area where the market broke, and it was a support area where always the market was rejecting, causing buyers to reject and enter, but the market broke that area. So this area is pure resistance. You see, so if this market is pushing upward, then at least its bullish rally has to end somewhere here. You see, and these are more than, let's say, 300 pips. So as we go to the lower time frames, we are going to focus much on this very huge bearish move, and not only that bearish move. And of course, from my experience, from what I see, this market will be bullish at least up to somewhere here. At least to somewhere here. See, at least somewhere here, somewhere there. So generally, for someone, let's say, looking for to trade GBP JPY, specifically for this week, think about a bullish GBP against the Japanese yen. So as we go to the lower time frames, we are going to see much on what is happening around that area. We have to see reversals around this zone. We have to see this market changing direction so that we can get that bullish move, at least coming back to this area here, to this zone here. You see, at least this market coming back to this zone here. You see, so as you can see from the 4-hour time frame, the market has already started giving us a reversal, something reversal. This is clear head and shoulders. You see, it's a very, very clear head and shoulders, and the market is almost breaking that neckline, which is somewhere here. So if this market gives you a bearish move, at least coming back to this specific zone, then you are likely to get your buy trades going up that way. See, so for anyone looking for to trade this, there is that very huge possibility on you getting something from here. See, because this is the neckline, and as you can see, of course, from this candlestick which had a very huge movement, it's almost closing above that. You see, it is almost closing above that. But also, let me mark this zone here. Let me also mark that zone there, so that for someone who is looking for, let's say, to think about going long, the right areas where you are likely to get good entries, it is at least around this area here. So I'm quite very sure this market will move, break, maybe close above that. And if you see this market giving you at least those discounted prices, think about going long. See, because the market has already started creating this the very, very huge reversal chart pattern. See, this is the very huge reversal chart pattern on GBP JPY. See, so generally, that's what is likely to happen on GJ. You see, that's what is likely to happen on GJ. I think you can see clearly how this market has failed to continue giving us this bearish move. You see, it was clear low, clear high, clear lower lows and lower highs, breaking structures going down. But where the market is currently, I think you can see this was, of course, from the 1-hour time frame, this was reversal chart pattern, which is clear. You see, head and shoulders. I think you can see this is left shoulder, head, right shoulder. The market broke that here. It came back on this same area. So guys, I have something that I clearly know. You see this movement here, the movement from here up to here. You see, After the completion of that chart pattern, though the market is just ranging here and there, but this market has to move the same movement. You see, so let us expect this GJ to reach at least around this zone. And if it reaches around that zone, if let's say if it gives you a little bit of, let's say, discounted prices pushing down around this area, then those are more than, let's say, 200 pips going up. So for this week, there is that very big possibility of us experiencing something like that. But from where the market is currently, it is not a right area for you to enter, because I think you can see it is on its high. Just wait for this market to react. It is going to react, and if it is going to give you discounted prices, it is going to come back inside here. See, but if it won't come back inside, then for those people who are scalpers, you can just focus much on this area. I think you can see this market is creating high, low, high, low, and it is on its high. So this market has to give you high, low. Then at least from the high, low, you can think about going low. See, so that's what is likely to happen on GBP JPY. Okay, so let's go and analyze gold. Let's go and analyze gold. Let's go and analyze gold and see what is likely to happen, specifically for those people who are trading gold. Of course, I had gold today morning, so I know exactly what gold is doing right now. See, I know exactly what gold is doing right now. I had a trade on gold. See, I think you can see. See, you can see. Because from here going upward. So it was very, very clear. Let me show you what is likely to happen on gold today. Okay, let me delete each and everything and start afresh. I'm always telling you that gold is among the volatile things that you're going to trade in these financial markets. But apart from that, gold is easily, let's say, it gives clear market structures. You see, so if someone, let's say, is very nice on reading the charts, is very nice on, let's say, analyzing, it's going to be very easy for you to trade gold. The problem with that, most of the people are always analyzing gold, thinking that maybe you have to buy anywhere or sell anywhere. In gold, you must be very, very perfect. You see, because let's say a 15 minutes candle, it can just give you over, let's say, 200 pips movement. So if you're in a wrong position, then you are likely to face something from there. You see, but if you're on a right spot, then you are likely to face something good from there. So we are going to analyze gold, of course, starting from their time frames. We have to know exactly the general direction of the market. We have to know exactly what gold is doing right now, but we have to know exactly the right spot area where you're likely to get your buy trades or sell trades. You see, so I can see this. Okay, let me delete here. Let's see, these charts are a little bit clear. Okay, so now starting from the higher time frames, we all know that gold USD is bullish. Generally, we have a bullish gold USD. You see, and everyone is always thinking about, let's say, that gold has to continue buying, gold has to continue buying, but we all agree to each other that you won't just buy because gold is bullish. You see, you won't just buy because gold is bullish. You are going to buy if the market is on the right area or is giving you the right opportunity for you to buy. You see, but generally, gold USD is bullish. See, now we have to start going to the lower time frames and at least see the market structures that are being created here. We all know that for a bullish market, the market has to give you clear highs and high lows, swing highs and swing lows, swing highs and swing lows. But on gold USD, you have to be very precise. See, you have to know exactly where the market is currently. And the good thing about gold, guys, if you're a day trader, you have to switch a little bit because you have to scalp this. See, you have to scalp this. So let me mark some zones here, and as we go to the lower time frames, these zones are going to make sense. You see, but from here they might not make sense. But as we go to the lower time frames, these zones are going to make sense. So generally, we have to focus much on a very small portion of them of this market, because generally, let's say for example, the moment from here up to here, these are more than 10,000 pips on gold. You see, I think you can see 13,000 pips on gold. You're anticipating 100, let's say to 200 pips. You have to focus much on this area where the market is currently. So let me also add this zone here. I mean that level, and then we just go to the daily time frame. At least we might see more market structures around that area. See, so I think you can see around this area here, this is a very, very strong zone. It is a very, very strong zone, because on the daily time frame, try to imagine the market once touched on this area, we saw that rejection, and once it broke that area, the market came almost on the same zone to retest, and then we had that very huge movement. And then when the market broke that zone, the market came back on the same zone, and that's where the market was rejecting for a long time. These are many days where the market is rejecting, failing to break that zone. Let me also mark this zone here, because for the past 2 days, the market has failed to break this zone. So there is something from there. So as we go to the lower time frames, we are going to focus much on this area. And bear in mind, gold USD is bullish, so we are likely to find more of bullish characteristics around this area. And if the market is bullish, and if it continues with its bullish rally, then this might happen. This is high, this is low, this is high, this is high-low. Then this market might give us something like that. But you won't just conclude that way on gold. Gold is very volatile, so we have to go to the lower time frames and see exactly what is happening right now on gold USD. You see, and see exactly what is going on right now on gold USD. So let's say, for example, around this area, we just go to the 4-hour time frame and focus much on this specific area. See, this was clear high, clear low, clear high, clear high, low, clear high. Then the market push it down. And then from here, the market had that bullish rally. It rejected. I mean, it was rejected. It failed to break that zone. Then we can see something here. The market had a little bit of consolidation around this zone. So I think that's why the market failed to break this area. And then we had this bearish move. Guys, bear in mind, you're trading gold USD. And for gold USD, as I've told you, you have to be very, very perfect. And as you can see, from the 4-hour time frame, this market is giving us clear high, clear low, clear high, clear high low. So from what is happening right now, this market is heading upward, at least on this zone, somewhere there. See? Now for those people who are trading gold, we won't focus much on this area, but we have to focus on internal structures. Then if we are to put our target, this is the target, somewhere here. See? If we are to put our target, this is the target, somewhere here. Let me put it as a zone, somewhere here. You see? So let me mark this one here as our last low, somewhere here. Not only there, but also apart from that, this zone here. This zone here, not only there, but also we have another zone here. You see, we also have another zone somewhere there. So as we go to the lower time frames, guys, we know that we have a bullish market, and we are going to focus much on that area. See? You see? Around that area. So as we go to the 1-hour time frame, this is the clear bullish market. Very, very clear bullish market. I think now you can see how it starts making sense. See? I think you can see clearly how it starts making sense. And as I've told you that for this bullish rally, which was going on here, this market at least has to touch on this zone. And once it touches on this zone, then let's say for those people who have their bullish move, or let's say bullish trades on gold USD, they might end somewhere here. You see, somewhere there. But generally, I think you can see what we are speaking about, that this market has to come back on this zone, but on our side, we are going to end somewhere there. So if you are going to end somewhere there, then we have a bullish move on gold USD. You see, this is the bullish move on gold USD. Not only that, we also had this bearish move on gold USD. Guys, I once told you here that if you're going to trade gold, you must know how to analyze these charts on higher time frames, but also on very small time frames. You have to know exactly what you are doing. You see, so from there, I just go to the, let's say, 30 minutes time frame. I must see some information around that area, because you cannot generalize and say that I'm buying gold. Try to imagine the moment from here up to here, these are more than 100 pips or 200 pips. Or let's say if this market gives you a bearish move, the moment from here up to here, these are more than 100 pips. So that's why on gold, I said that you have to be very precise. See? So I think you can see we had that bullish move. This was low, high, lower, low, low, high, lower, low, and this is lower high. You see? And for this lower high, somewhere here. You see? So as we go to the 15 minutes time frame, maybe we might find something more on this. See? This low, high, low, high. A little bit of selling on gold USD. You see, a little bit of gold. I mean, it's selling on gold USD. And then remember, generally, this market has to push at least up to this zone. So for anyone trading gold, that's what is likely to happen. As even if we just go to the 5 minutes time frame, you find this market giving you clear. You see, clear. These are clear. I think you can see from here, the market gave us a reversal chart pattern, which is clear double bottom, and then the market broke that zone. I mean, that's double bottom. This was clear W pattern. You see, of course, these were a little bit of, let's say, it was like, of course, they call them manipulations, but this is not the good market conditions around this area. But generally, this is clear high, this is clear low, this is clear high, this is clear high low, this is clear high. Of course, today morning, I found this market around this zone, so I caught a little bit of a selling market and a buying market around this area. You see, so it was very clear. I think you can see how God prints clear market structures on lower time frames, clear highs and high lows, and this was high, and this is low. You see, so currently I think you can see this market is heading up, and though this market has reached on the zone where you cannot make any decision, because look at this. You see, look at this. So that's why I'm speaking about this, that if the market touches on this zone, you see this zone here, that zone there, then think about going short on gold USD. And you won't just sell because the market has touched on this area. You have to go to the lower time frame, specifically the 1 minute time frame. You're going to find reversals. If the market prints something like this is a reversal candlestick, and this confirms, then the market will give you that short trade around that area. So generally, that's what I see on gold USD. And of course, I can emphasize on this. If you're a trader looking for to trade gold USD, guys, you can trade this anyhow you wish, because if you clearly understand about market structures, nothing can beat you on gold USD. See? And of course, don't think about putting, let's say, 20 pips stop loss on gold. It is going to hit the stop losses daily. You see, you have to think big on gold, because you are dealing with a very volatile thing, very volatile commodity, of course, very volatile pair. So you have to also to be volatile and know exactly how you can deal with this. So guys, our time is almost up. Thank you so much for tuning in. Thank you so much for being here. Thank you so much for choosing FXPesa as your brokerage company. And I'm quite very sure that we have gained a lot from this. We have discussed a lot from this. And guys, I want to remind you that you can also follow us on our socials. Just go on YouTube at FXPesa here. You see, on Instagram at FXPesa, everywhere at FXPesa. But also, guys, I'm Prudence Maximilian. Don't forget to follow me on 2026. We just trade. Thank you so much for your time.